This week's listener of the week is CX Invest. CX, thank you so much for leaving us a 5-star review. And for those of you listening, if you leave us a 5-star review below, you might be next week's listener of the week. Week. This week on Commercial Real Estate Secrets, we have Whitney Elkins-Hutten. Whitney is the Director of Investor Education at PassiveInvesting.com and the founder of AshWealth.com. Whitney, thank you for being on the show today.
Thank you so much. This is going to be fun.
Yeah. So Whitney, if you don't mind, can you share with the listeners who you are and what you do?
Yeah, so I am the Director of Investor Education at PassiveInvesting.com. And quite often people ask me, what is the Director of Investor Education? Well, my background and experience in private equity real estate was in holding the role of Director of Investor Relations. So I get to work with investors in my role today to help them understand the ins and outs of passive investing. So they feel comfortable, diversifying their portfolio with cash flowing and equity building assets.
Fascinating. So how did you get into this?
Well, I'd like to say that I went to school and this was like my dream job all along. But really, I went to school for public health. I have a master's degree in epidemiology and a PhD in public health and nutrition. So I had a very different career path. And really, my intersection with real estate occurs back in 2002, where I bought a house with a significant other. And about a month later, the relationship fell apart and I had the house. So yeah, like I was the one with the paying job and everything. But the house was in dire need of a rehab. We're talking about green shag carpet and psychedelic daisies painted all over the walls, fresh out of the 1960s. And so, guys, YouTube didn't exist back then. So I had to learn how to rehab this house just using, off of Home Depot classes and a Home Depot 1-2-3 book, which, by the way, I still own. But really, when I sold that house 11 months later, because I thought it was going to bankrupt me, that's when I realized that I made $52,000, kind of like as a side hustle, like nights and weekends, which was almost as much as I was making in my day job that had me traveling 70, 80 hours a week. Guys, remember back in 2001, 2002, we're post 9/11. So we're talking about like smallpox threats, anthrax threats. Like, I had a pretty high stress job.
Wow.
But really learning that lesson early of how to unhook my time and the value I create in the world was pivotal for me. I did several more live-in flips and house hacks. I scaled almost a 40-unit single-family rental portfolio, bought a multifamily building in partnership, got into larger general partnership deals on multifamily assets. And then that's where, I landed today.
Okay, so you've done a few deals in your day, sounds like. I love it.
22, 23-year overnight success.
All right, aren't we all?
Right. We're all like, works in projects.
So, as the Director of Investor Education at PassiveInvesting.com, what does that actually look like? How are you educating potential investors?
Yeah. So, having had the role of director of investor relations before with a different private equity group, I found that my love was talking to investors about their goals, their risks, their timeline, what they needed from their passive portfolio, and then helping them match to an investment. Now, if we continue what that role is for a director of investor relations, now, I've got to pitch a deal, get them into a deal, right? And then close the deal, right? Get all the money in a very short timeline, high pressure job. But for me, I really would love taking a step back and just, talk kind of like almost like a coach and mentor to investors who are looking to get into the space, either diversify, maybe they already are a commercial real estate professional, but they want to diversify outside of their current holdings diversify out of their current business, or maybe they are, a high paid professional that wants to take their income and put it to use to scale passive income in passive holdings, right? Get it out, keep it out of the stock market, but they're not going to double down on their employer's business, like with stock options. They're going to take it out. They're going to create that income for themselves now. So that's what I get to do, is really walk this quasi mentoring relationship with investors. But I'm going to meet them where they're at. Some people are very new to the space. They don't understand the lingo, the jargon. And then I'm going to hold their hand, match step, and lead with them through, developing, understanding, remembering, analysis skills to the point where they feel comfortable going into an investment.
Yeah, it's a big step and it can be really intimidating, but I think I have heard people say this over and over and over again. I should have done that. I should have bought that deal. I should have, you're driving by with somebody and they say, I almost bought that deal. I should have done it. And it's like, my biggest fear is the regret of not having done something. So while it's a big hurdle to get over initially, you have to jump, obviously with calculated caution, but, and like you said, with education. But at the end of the day, as long as you do, our rule number one is don't do dumb deals. As long as you follow rule number one, hopefully you make it out on the other end. All right. So I have some notes here that talks about the Billionaire's Real Estate Playbook and how the wealthy invest in real estate to maximize their returns and time. Mm-hmm. Can you talk about the Billionaire Real Estate Playbook?
Yeah, so that's a part of a section out of my book, The Money for Tomorrow, How to Build and Protect Generational Wealth. I recently published it this year with Bigger Pockets. But in that section of the book, we're talking about the 7 different pillars of wealth, right? If we can go back and study the greats, and guys, remember, I don't know if you don't know my story, first few deals went really well. And then I had that one deal. You talk about don't buy dumb deals. I bought the dumb deal and it almost broke me, right? And so I was like, okay, wait, hold on. People make money off of real estate, cash flow, equity growth all the time. What are they doing with their portfolio, with their investments in order to put themselves in the best position for success, right? Any investor knows, if you've been in this game long enough, it's not a matter of if you're going to have a dumb deal, it's going to matter of when, right? So how do we limit that? Well, one, we want to invest in deals that are going to preserve capital, right? Warren Buffett's rule number 1, don't lose money. Rule number 2, see rule number 1, right? Let's try to put all those cards in our favor to not lose our initial capital. Because if we don't lose our initial capital, we live another day to play the game. Number 2, we want to invest with deals that have some sort of cash flow or potential for cash flow in a short period of time. Now, I know somebody might be listening to this and they're like, whoa, I do ground up development or I flip, cash flow is not in the cards. And I'll explain to you how all these pillars fit together in a second. Pillar number 3, equity growth. Either natural equity growth, forced equity growth, which is the king at building wealth, and then natural pay down. If you're going to have a tenant in the property and they pay down the loan for you. Those are the 3 different ways we can get equity. Number 4, tax benefits. Okay, that's why we love real estate, so we can accelerate our wealth. Those are 4 core pillars. And then on top of that, inflation hedging, making sure we're using leverage in a very smart way. Okay, a lot of people learned that lesson over the last 2 years. And then also making sure that you're investing with the experienced operators. If you aren't the operator, you have to, if you are the operator, you have to be experienced. If you're not experienced, then find that experience and invest with them. So those are the 7 pillars. And there are investments out there that don't have all of those 7 pillars. Just know you're giving up a foundational way of making wealth, right? The billionaires out there, they are investing in assets that have most of those pillars in them. Okay. Mm-hmm. Generally all 7, but maybe they might give up 1. If they want a flyer investment, they give up the cash flow, but they've got they have 6 other ways to make their wealth with that particular investment.
Fascinating. So talk to me about passive real estate equity versus debt. Which investment strategy wins in today's market?
Ooh, that is a great question. So you first have to understand the market cycle, right? Where are we in the market? Okay, so are we in recovery? Are we in growth? Are we in hypersupply? Or are we in a recessionary environment? Now, I can ask that question to your audience and I might get like, well, max 4 different answers, but it really depends on where you are in the United States. Okay. We can't, every different region in the United States, even state, maybe even local municipalities within that state are going to have be in the different phase of that market cycle. Generally right now, we're kind of in the hyper supply in a lot of area. We have been in the last couple of years, we're moving through the recessionary parts. Some areas of the United States are moving to recovery. That is a key component because that's going to inform what type of assets do really well. Because whenever we hit hyper supply into recessionary environment, debt gets sucked out, credit gets sucked out of the system. Okay, banks stop lending. Okay, that gives a unique opportunity for investors to step in and become the bank and solve that problem. Okay, because now they don't have to compete with the banks. They can, charge a 11, 12, 13, 14% interest rate and 2 or 3% in origination fees and make a lot of money that way. Okay. But as we move through recovery, bank money is going to start coming back in. There's going to be more competition. So now we're starting to shift into where equity assets may make more sense for their portfolio. So there's really 2 questions there. Equity or debt depends on what part of the market cycle you're in. If you're a passive investor, though, that is one way to diversify your portfolio. We talk often about diversifying across operator, market, and deal. We also need to diversify across the different layers of the capital stack because it's not a matter of if we hit these market cycles again, it's a matter of when. And so we want to have our portfolio balanced to where we can, smooth that ride, smooth that volatility.
Sure. So as a passive investor, you obviously need to find an active investor or a GP to lead the way. What are 3 qualities in a GP that you find you would invest your money with?
Well, this goes back to who do you know, who do you like, and who do you trust? So first you got to be in the room with these operators. Where are they hanging out? And then you have to get into relationship with them. Okay. And I think that those first 2 steps are really where, if you're a limited partner, new limited partners kind of fall short because they're so starry-eyed on like, give me the deal that's going to make the most amount of money, right? Because they're coming from stocks, bonds, and mutual fund investing. We really have to get to know and like that person and then establish trust with them. Understand their background, experience. What kind of team do they have? Do they have the ability to close the deal? Do they have the access to credit and lending? What has happened in their portfolio? Because everybody has had some sort of challenge in their portfolio if they've been around for the last 5 to 8 years. But I want to know how that operator has met that challenge and navigated it through. I don't want them burying those challenges. I want to know the dirty laundry, air it out, give me the full story. Because that's going to just feed back into that know, like, and trust loop. And then of course, as you want an operator that is transparent with you, with what's going to what's going on with your deal from beginning to end.
So, say I have $50,000. I'm a new real estate investor. I have $50,000. What would you do with that in November of 2024?
In November 2024, for in private equity, ArE&x 50K is probably an initial investment. Right now, I would probably put it in a debt. If it were me, my 50K, I would put it in a debt offering and wait and see, something that has short-term liquidity that, get it out of the bank. It's paying, the bank's interest rate's dropping. I think my bank's down to 4% now, and they're pretty high for high yield savings accounts. put in a short-term debt offering, real estate debt offering. We have one. People want to know more about that. We can certainly talk about that. But wait, I think the big thing here is how can we get that capital making money, put it to work, but keep it liquid enough to where we can have enough patience to find the right equity deal if that's where you want to go.
Sure.
But guys, you can still make a lot of money allowing $50K to compound at 8%, in perpetuity, right? You can still make a lot of money that way.
Hey, my dad always says, I know this is somebody else's quote, but he always says, one spouse, one house, compound interest. That's Dad's motto. So
I think he combines 3 or 4 quotes into one, and I love it, right? Hey, you're gonna save a lot of money if you never get divorced.
Yeah. And he's not. We joke we do warehousing in Denver. We joke that our vacation houses are warehouses. And
nice.
That's what we do. Whitney, what makes you happy with what you do every day in real estate, investing, etc.?
Knowing that I'm creating a real impact in people's lives, even despite market challenges, in the past couple of years, just helping people, understand what passive investing is and how it can actually, be a good tool towards financial freedom. That is what gets me up in the morning, because I know I can help somebody create $200,000 in 3 years and 3 million in 20, right? So that will change the world the more people we can get into that mentality of owning their financial future.
Whitney, thank you so much for being on the show. Where can the listeners find you, follow you, contact you, etc.?
Yeah. So you can find me. The easiest way is you can go to passiveinvestingwithwhitney.com. I've got some free goodies for your audience, as well as if anybody's interested in investing in a passive deal, they can hop on my schedule and we can talk all things passive real estate. If somebody's like, whoa, I need mentoring and coaching and hand-holding to figure out this plan, you can reach me at ashwealth.com.
Whitney, thank you so much for your time today. And for everybody listening, we'll see you next week. Thank you for tuning in to Commercial Real Estate Secrets. If you have found our podcast to be valuable, please be sure to subscribe, rate, and review on your favorite streaming platforms, and make sure to follow us on social media at Aviva Real Estate. For brokerage services or to get in touch with us, head over to thewarehousehotline.com and submit a contact form. My name is Aviva. This is Commercial Real Estate Secrets. We'll see you next week.